I do is make money, I don't do shit else. Wake up, count racks, and I count that again. Broke boys talking, I don't hear what they say. Got your bitch on my line, she just want what I spend. All I do is make money, I don't do shit else. Middle finger up, yeah, fuck how you feel. If it ain't by the bag, I don't pick up this cell. Stack it up, flip it quick, I've been living too well. Walking, drip loud, whole fit disrespectful. Talking about money, little boy, that's my schedule. I don't got time for no broke ass lecture. You counting opinions, I'm counting extra. New chain coat, make your neck feel jealous. I don't say please, I just say send it. Bank account look like a goddamn fetish. Everyday payday, I meant that I said it. You flex online, that shit look pretending. I just hit deposit, that shit never ending. You worry about me, I ain't worried about nothing. I spent your rent on some dumb shit for fun, yeah. All I do is make money, I don't do shit else. Wake up, count racks, then I count that again. Broke boys talking, I don't hear what they say. Got your bitch on my line, she just want what I spend. All I do is make money, I don't do shit else. Middle finger up, yeah, fuck how you feel. If it ain't about the bag, I don't pick up the cell. Stack it up, flip it quick, I've been living too well. Hey, petty as fuck, yeah, I'm flexing on purpose. Bought the same chain twice just to make them feel worthless. You saving receipts, I'm just buying for fun. You waiting on checks, I got 10 of them coming. Bitch said she loved me, I told her I doubt it. You love how I spin, yeah, don't talk around it. I'm lit every day, I ain't asked for permission. I'm breaking the bank and I'm making new digits. Too many commas, I'm losing the count. You making excuses, I'm making it count. I walk in the room and it's quiet as hell, cause everybody know I've been ringing the bell. Money on my mind, I don't sleep right. If it ain't a bag, it don't feel right. You broken, you loud, that don't seem right. I'm rich and I'm rude, yeah, that's me, right? All I do is make money, I don't do shit else. Wake up, count racks, then I count that again. Broke boys talking, I don't hear what they say. Got your bitch on my line, she just want what I spend. All I do is make money, I don't do shit else. Middle finger up, yeah, fuck how you feel. If it ain't about the bag, I don't pick up the cell. Stack it up, flip it quick, I've been living too well.
Oh, brother, oh, brother, oh, brother. Good morning, good morning, good morning, and welcome back to another episode of the Matt Kohrs Show. It is a beautiful Tuesday, March the 31st, the end of the month. I suppose we're kind of like awkwardly halfway through the week, but we are about to wrap it up not only on the month of March, but obviously the first quarter of the year. So that basically means that today's trading session is your last opportunity to get green on the month and to get green on the quarter. And honestly, there might be enough of craziness in the market between Trump's commentary. If you missed it this morning, I have it right here, and we're going to be going over it. Basically, talking a little bit of game against the United Kingdom. So we'll be getting into that and putting that together with the, I guess, very important update from JP Morgan. Remember, their collar position expires today. There's a lot of negative gamma at 6475 on SPX. It's also roughly an upside gap fill. So a lot of technical updates there. And if I had to guess between the craziness of Trump's commentary and the updates there and a lot of the unknowns, putting that together with at some point today, JP Morgan's going to do a gigantic roll. So we're probably going to see some craziness in the spot gamma hero flow, whether we're pumping up, dropping off. So should be a really, really interesting session. These types of sessions really don't happen that often because you don't normally get a roll of 40,000 contracts in the overall market, especially on a random Tuesday. So excited to get into that, break it down, what it means, what it doesn't mean. Of course, I'll be going over the most recent Trump updates he posted on True Social, like I said, related to the United Kingdom, the Strait, and Iran. And then from there, I want to talk a little bit about just some of the major updates over the overall market and how things are kind of rough, and a little bit of the idea of when should we be buying the dip. So I do appreciate you joining me at the crack of dawn. What's it, 9:07 on a beautiful Tuesday? I know I keep saying that, but I'm so stoked that the weather is finally getting a bit warmer. I'm so stoked that the sun is out. I'm getting vitamin D. I'm not as like translucently Maya white as I am all winter. So just making me feel a little bit better about life. But as it comes to the market, yes, I'm going to do my job to try to lay out the major levels, what's happening, what's not happening. But remember, as it was accurately pointed out yesterday, we're here just to guess. So remember, when it comes to the world of day trading and scalp trading, literally, you have a 50-50 opportunity. So as much as maybe that sounds like it's some sort of a dig of like, you just are guessing, that's kind of what we're here to do. It's, can we make shrewd, informed guesses with minimal risk? That's what we're here. The best guessing show on this side of the Mississippi. Like I said, I do appreciate you guys joining me at the crack of dawn. And with all of that being said, let's switch it up. Stock futures rise after report says Trump looking to end Iran war. That's a very generous interpretation of what is currently happening. A better one is for us to really get into it ourselves. Trump lashes out at UK and France, telling allies that the USA won't be there to help you anymore. Kind of interesting how the same update from Trump can produce two very different headlines, even on the same news source. So obviously, I'm not going to be the arbiter of exactly how you should be interpreting it. So I'm just going to let you know what was said, and you could take away from it what you want. This is from 7-Eleven this morning, today, March 31st. This is from Donald J. Trump, obviously the president, on his own Truth Social. All of those countries that can't get jet fuel because of the Strait of Hormuz, like the United Kingdom, which refuse to get involved in the decapitation of Iran, I have suggestion for you. Number one, buy from the U.S. We have plenty. And number two, build up some delayed courage, go to the Strait, and just take it. Yes. The president is telling the United Kingdom to go to the Strait, and I guess you can interpret it as taking the Strait, or more reasonably go and just take the jet fuel that you need. But anyway, one of those two is something that he's saying. You'll have to start learning how to fight for yourself. The USA will not be there to help you anymore, just like you weren't there for us. Iran has been essentially decimated. The hard part is done. Go get your own oil. President DJT. That's the world we live in, folks. And what's crazier than this, like I said, this was posted at 7-Eleven ET this morning. The market actually viewed this to be bullish. The market actually popped on this news a good 150 points, and it's actually still elevated about 100 points from the moment that came out. So will it hold? I don't know. Maybe this one will be the time it does, but just to be fair, over the past 2 to 5-ish weeks, anytime he said something that's pumped the market, well, obviously it's been faded. So maybe this is going to be the one that bucks the trend that, hey, I completely understand that could happen, or maybe this is just going to be par for course, and every single pump is still just getting faded until this deal is done. So as of this morning, that's the hot news, where pretty decent pump that is still holding. Gave a little bit back from the highs, but overall definitely higher than we were. Trump tells aides he's willing to end war without reopening Hormuz. Administration officials assess that forcing the waterway back open would mean extending the military mission. So a little bit more of an official update rather than just the Truth Social. Iran attacks oil tanker after Trump wavers on war escalation. So once again, I'm just trying to illustrate the point. Depending on the news source that you're reading into, quote unquote, trusting, you can get a very, very different interpretation of what is currently happening right now in real time. But what we do know, the measurables are obviously the impact directly on the market, and then hitting our wallets everywhere is the price of crude oil, which is right now, where is crude oil at? It's chilling at 103, which means gas is going higher. U.S. gasoline hits $4 per gallon, highest since 2022 as Iran war drives up fuel prices. Folks, this is just basic supply and demand. basic supply and demand. The average U.S. gas price has soared beyond $4 per gallon, up more than 30% since the U.S. and Israel attacked Iran in late February, 65 to about 103, with the high being 119. Diesel prices, meanwhile, have surged more than 40% to more than $5 per gallon, with broad implications for the U.S. economy and obviously also the global economy. Vice President J.D. Vance said a rough road lies ahead on gas prices, but promised the spike is temporary and will fade after the war. So, yeah, I mean, obviously, I'm not happy about it. You're not happy about it, but we're seeing prices go higher. And when you have a soft labor market, as in not as strong as you want it to be, and you're looking at a rise in inflation, that's when people start talking about the word stagflation. It's when people start talking about the word recession. And right now, obviously, we are seeing that play out in the overall equities market, because the actual S&P 500 is just getting trounced from the all-time high to this moment, or I should say market close yesterday, down 9.4%, and at one point it was down 9.8% from the all-time high. Granted, this morning we're getting a little bit of a pop back, pretty much at the high from yesterday, but obviously a very fair question is that going to hold? And obviously your guess is as good as mine, but whether you're looking at the short term or more of the medium term, obviously this is a bit scary because the sell-off is seemingly accelerating. It doesn't mean such good promising numbers for all of Wall Street. Wall Street is finishing the worst quarter for stocks in 4 years. Wow. Investors had high expectations for 2026. Now they're just hoping to sidestep a recession. I mean, at this point, I feel like Trump, because of the financial implications, what was that ding that I just heard? Because of the financial implications of what's going on, I think it's going to be very, very evident that the midterms are probably going to be won by the Democrats, more left-leaning, because people are obviously just not so stoked whatsoever about what's happening with prices just going higher and higher and higher. Now, obviously, because we're all involved in the economy and the market in one way or another, I obviously, just as a human, want this to bounce back and ideally bounce back very quickly, but obviously time will tell. But I also want to remind you, in the short term, obviously it's very, very easy to get spun up and people are looking at the drawdowns in their account. But remember, these are the times you want to be adding to your long-term account. Obviously, like I know it's not fun. In fact, sometimes it's relatively painful, but I do need you to know that obviously it's better to be adding your favorite high-quality blue chip stocks to your long-term account in moments like these rather than when the market is ripping, because you are shopping on discount. So I know that it doesn't feel good, but that's what you need to be doing. It is clearly what you should be doing. And I'm not the only one saying it. Bill Ackman says it's one of the best times in a long time to buy quality stocks. Now, does that mean today, like pinpointing today or yesterday as the day? No, if you're perfectly bottom taking it, that's more luck than anything else. No one knows the exact moment to do it, but generally when the market's down 10%, it's better to be adding to your portfolio than when it's up 10%, just because you are buying on discount, especially if you have that long-term, multi-year, multi-decade view. So I just want to, I know a lot of the times we're talking about day trading and scalp trading, that type of a thing, maybe even a little bit of swing trading, but as it comes to your long-term account, these are the moments. Like, I get it. I get it. It is not comfortable. It doesn't make you feel all warm and fuzzy on the inside. But these are the times that you should be starting to think of, like, what is your laundry list of ones that you would like to be adding to your long-term account? And I thought this was a pretty interesting breakdown from Bloomberg this morning. Let me make sure I have the audio on.
Just an update of the breaking news and hence why U.S. futures have changed their course. This journal headline that just crossed, we're just trying to figure out as well, markets are trying to figure out globally whether or not this does present the most feasible off-ramp. With all that being said, it is somewhat of a confusing end to what's really been a manic month, and it's really been a terrible month for risk assets. In fact, when you look at how we've done on global equities this month alone, it's the single biggest month in terms of value destruction on record. Close to 12 trillion in market cap.
You heard that right. The single largest month in value destruction, almost 12 trillion, more specifically $11.7 trillion just Thanos snapped away. And that was 1 month, folks. Pretty brutal March.
Across our benchmarks of market
That's a
cap
lot of
globally.
trillions.
And as you can see year to date, we've now erased, if not more, gains for most asset classes for the year. And this has taken us back a few months in terms of price here.
I mean, the fact that this is even bigger than what we saw during the Russian invasion of Ukraine back in 2022, even bigger than what we saw in COVID of 2020. I mean, that certainly does show really what we've seen is that, are we still at this point, some people are still wondering, are we still underpricing?
Yeah.
The risks to not just supply, but also potentially the demand destruction that could take away, given the fact that even if we see President Trump saying, I'm done, even without the reopening of Strait of Hormuz, you're still talking about energy infrastructure, oil infrastructure that has to be repaired. That could take months, even years. So I think the longer term implications are certainly the one thing that we have to really deal with here. And what does that mean for, investors in portfolio construction? Yeah,
in fact, let's get the thoughts right now of Dina Tang. She's with us right now. She's head of Global Index Portfolio Management at Franklin Templeton. Dina, good morning, and a pleasure to have you join us right now. I'm not sure what kind of months you've had. It's really been manic across
Dina Tang.
Most of us for here in the Asia Pacific here looking at these markets, but. So tell us, the month that we've had in terms of market moves and value destruction,
11.7
is there a dip
trillion.
you are willing to
Obviously
buy
not the biggest percentage hit we've
ever
ever seen, which I would argue is actually more important, but that's a sensationalization that obviously occurs in the market and media all the time.
But if you look at the year to date, there are some markets that are still posting positive number for the year to date number. So I think it's about where the war will potentially end, and also how each of the different asset classes as well as a specific country are positioning, because it's not impacting everyone the same way. And I think it shows that diversification really pays. On top of that, strategic planning for each of the country, or who can best plan with the different contingency, you can see that in their differentiated performance.
So which are those sort of, markets and sectors that you look at, right? If it's not going to be, single haven sort of hedging.
Before she talks about this, before she gives away her opinion, I actually do want to directly ask you guys, which sectors are you looking to buy? Personally, for me, I'm actually looking to add to my favorite blue chip tech stocks because I think this AI revolution is still alive and well. And even though things are taking a bit of a hit right now, I'm still expecting in the next couple of years, especially the next couple decades, my base case is that tech will outperform. So I'm looking to add my favorite blue chip tech stocks, especially the ones that are a little bit more in the world of AI, to my account. And I'm also simultaneously maybe looking to add a little bit more, and actually I don't even have it yet, so I'm looking to create a little bit more of a conservative dividend drip, like dividend reinvestment portfolio. Those are the two things on my mind, of getting into kind of a conservative dividend account, and then on the other side, kind of just like those classic, not necessarily the Mag 7. I see some of you are talking about the Mag 7. Not necessarily that. Like, of course, I like some of them, but not all of those are like the AI ones that I'm looking. And there's some other tech stocks that I think are interesting. But those are what I'm looking to get into. So before we see that, AMC mainly, blue chip and CLM for dividend reinvestment, PanW, AMD, Tesla. Interesting. All in on AMC, Tesla. Thanks, WTI, the revenue will be strong for a while. Okay. Well, anyway, this is what Bloomberg has to say, or specifically Dina Tang. Oh, why isn't it going?
The beneficiaries of this then?
Yeah, so I think the way to look at it is looking at the specific countries. So if you look at China, for example, they are less impacted in this. And part of that is because of their strategic diversification of their energy supplies, both into different locations, but also into renewable energy. They also have a huge stockpiles that have strategically been put
Freeing
together.
up cash for
And I think
SpaceX.
people
I like
realize now the
SpaceX, but I don't
dependence
know
of oil
if it makes the
may
most
not
sense
be
to get
the
it on
best
day one.
bet.
Generally,
And you've
IPOs
seen
are
the data
vastly
now that
overpriced.
electrification could actually be cheaper. And China is one where you can potentially play in that sector, not only for their
Google,
own country and their
Microsoft,
own economy, but
WMT,
also for
TG, DP for
the rest of the
Wheelstrap.
region,
Okay.
other outside of Asia, as well as in Africa.
Palantir, PLTR, data centers. I think that's an
Okay.
evident one.
So
There's probably
well,
a good
sorry,
data center
to circle back to my
ETF.
initial question. What do I buy then?
All right, here we go.
Yeah, so I think for investors to look at is trying to disaggregate the exposure globally, right? So if you look at specific, you can go with sectors, you can also go with single countries. So if you disaggregate international market and see how they play, you can look at markets such as China, you can look at Taiwan.
You
can
know,
also
dude, they're
look at
always
Brazil
trying to get us to
as
get
a
into China,
potential
and it's just never
diversification
fucking worked.
to
Ray
your typical
Dalio's been saying it for
allocation.
years. Like,
So on top
I
of
don't know what's
that,
going
if
on. They're
you
like,
look
invest in
even
China, invest in China,
more,
invest in China,
at
and
the
it's
top
just not
line,
worked, dude.
you can also look at the correlation across all the assets, because in periods of volatility, not only you zero in on the specific asset that has lower volatility, but you also look for uncorrelated asset. And if you look across different markets on the equity, that level of correlation actually has decreased, which is a good news for investors to be able to get the pieces and create a portfolio that is diversified but less correlated. And I think that's where ETF come into play, right? There's a lot of ETFs out there, from single country ETF to income tilted ETF, but investors can see and be able to allocate very quickly to get the targeted exposure, but also using it as part of the whole portfolio construction to balance correlation
So basically,
and liquidity.
the
as well
TLDR
as,
there is the pitch is wide, boring exposure, and that is safer, and most likely, just based on the history of the market, if you do that, you're going to be good. But obviously better gains are more coming from intentional selections, like a smaller basket that obviously outperforms. So you're increasing your risk, but generally whenever you increase your risk, you're increasing your potential reward. So just something to think about. I see a lot of naysaying. I mean, hey, even me, I'm like, what's the title of today's stream of like stock market crash? Yeah, things are brutal right now. We're pretty much in the correction territory. A correction is when you're down 10%. So we haven't exactly hit that, but we're getting very, very close. Like we were at 9.8% yesterday. So we're pretty much knocking on the door of an official correction. Can it get worse from here? Of course it could get worse from here, and it's going to get worse the longer you have all these prices, specifically in the world of energy, remain elevated. We are trading at 103 a barrel right now for crude oil. We were at 65. The longer this stays up, obviously inflation is higher. We're doing this right now. Unfortunately, the job market's a bit weaker. You put that all together, you're getting stagflation, you're getting people starting to talk about a recession, the chance of them raising rates and doing quantitative easing, not necessarily the highest. We have a new Fed chair. Yeah. One of the biggest misconceptions I hear about the market is like when things are bad, they're like, okay, it can't get much worse. Yes, it can always get worse. But that's why you want to treat your active trading account and your investing account as two separate things. I rarely think of my long-term investing account. I think about it when things are bad because that's when I want to shop on discount. Other than that, for me at least, it's out of sight, out of mind. I don't look at my long-term investing account unless I'm trying to add things to it or if I'm doing taxes at the end of the year. Other than that, as my active trading account, I'm just playing whatever way the trend is. I know some people have a little bit of a psychological pause there. They don't necessarily like going short or bearish in their short-term account because they inherently know that if they're right in that, it hits their long-term account. But if anything, you're hedging out your total net worth. So maybe, and this is what works for me, maybe it will work for you, maybe it won't. I completely separate the accounts. My long-term is my long-term account. Like I said, I rarely check it. And then my active account is my active account. And in fact, I have active futures accounts, active options accounts. I even do even more delineation. So like when I'm looking at that account, I know what I'm focusing on. I'm not pushing it all together and maybe having some sort of psychological bias. So please be mindful of that. But overall, when you see big hits to the market, I understand with mainstream media, there's a lot of screaming and hyperbolic statements such as the worst sell-off ever. And by dollar value it is, but remember every year that passes, the dollar's becoming worth less and less and less. So percentage-wise, it is not the worst sell-off we've ever seen. Dollar-wise, in terms of the month of March, 11.7 trillion is pretty rough, but it's the percentages that really matter. So that's a little bit of mainstream media just being mainstream media. But anyway, I get that it's like not comfortable, but these are the moments you want to start to think, okay, this is where I add to my long-term account. A little bit of a positive update. TSA officers are getting paid again, but many airports remain short-staffed. So obviously the first half of that pretty good. That TSA hopefully is returning to normal. So a little bit of a positive update there. With respect to today, Tuesday, March the 31st, 9:45, we get Chicago PMI. 10 a.m., we're getting JOLTS job openings and consumer confidence. That's at 10 a.m. And today is also the roll of JP Morgan. This gigantic negative gamma node at 6475 is the put side of the JPM collar position. If you don't know what a collar position is, go Google it. That's not really the point of this. What you need to know is JPM has a gigantic put position at 6475 that expires today. So not only will there be clear delta and gamma implications of this expiring today, but they also have to roll it and create a new one. And this is sizable. This current one is 38,000 contracts. This is a big boy position. So not only is this expiring today, which is clearly going to have implications on the market because of what market makers have to do in reaction to it disappearing, they obviously also have to react to the brand new position, clearly. So basically at some point today, historically it's happened between like noon and 2 p.m. ET, but obviously there's no like specific rule on when that has to happen. That position will be rolled. So pay attention to that, pay attention to obviously the jolts, and pay attention to any random commentary from Trump, but going to be a pretty exciting day. This is all from Spot Gamma. I highly recommend you guys get a Spot Gamma account. I've had all the options analytics tool that you can possibly have in the world, and Spot Gamma is second to none. If you are looking for a deep, high quality analysis of what's happening in the options market, there is no better option than Spot Gamma, pun intended. But anyway, after today's expiration, SPX gamma is essentially negative 4 billion across all strikes. That's a lot of negative gamma. Historically, the roll starts with some big zero DTE prints. If you see those fire off, 10K Tron contracts are deep. Once again, this is a very sizable position. Then you know the roll may be on. Also watch for unusual big SPX moves that play into the big prints. The mechanics, print timing, all has morphed over time, and not only based on what strikes are in play, but also likely as the whole world starts watching for this. My core takeaway from all of this is that the trades have been suppressing SPX, realized volatility, and then may now change with the expiration, as in vol, which is already high, might now go higher. Extra credit wise, JPM put expired in the money. Has it ever expired in the money? Which right now it is in the money. According to the records from Spot Gamma, March 2020, the Rona Cross where the put was expired 18% of the money. There were 3 times that the long put has tested into expiration. So we're going to be finding out how much things are changing or not changing today. And on that note, dingity ding ding ding, the world's largest casino is now open. Best of luck to all, play responsibly, and if not, have fun. It's gonna be a wild one today, so more than normal, we're gonna be coming back to this Spot Gamma tool to see if we can track the roll. It's gonna be incredibly important. I mean, theoretically, they could do it at any point today. I don't think it's gonna be in the morning just because all the other times historically have been in the afternoon, but obviously, we will wait and find out. Right now, to start the day off, the 5-minute, 10-minute, 30-minute is all bullish momentum, and the 4-hour is bearish. Looking at the NASDAQ, same thing. 5-minute, 10-minute, 30-minute is all bullish. The 4-hour is bearish. But remember today, Trump is already popping off on True Social. We have the Chicago PMI at 9:45, and we have consumer confidence and jolts at 10 a.m. So this is the week, generally the first week of a new month, and obviously we're concluding March heading into April. It's an important time, especially when we get all the data jobs as it relates to jobs. So paying attention to all of that. Oil's still sky high. It's trading at 103. So I see a little bit of a bounce in the world of equities, but I'm not necessarily sold as, oh, this is the moment to be like buying everything like a crazed madman, just because this JP Morgan, I don't see enough people talking about it, but it is massively, massively important to everything going on. Currently, NQ, for all my futures trading, is trading at 422. I just want to let you know that VWAP is all the way down at 286. So even if we have a bullish day, but they want to revisit VWAP, that is a large sell-off. So please be mindful that just because of how the overnight session moved, things can still be quote unquote pretty bullish, even with like 150 point hit to NQ. So obviously, please be mindful of your risk. Like I said, out of the gate, we're going to be checking a lot of the options flow just to see what is happening, what isn't happening. Once again, if you're just joining in right now, this position, the 6475 gigantic negative gamma node. This is the put side of JP Morgan's collar. 38,000 contracts. It expires today, which has massive implications, not only for it expiring, but also for the brand new position that JP Morgan needs to be creating. And it's all happening when Trump is popping off. We're getting jobs data, and we are a hair away from officially entering into correction territory for the overall U.S. stock market. And it's going to be a good one. So with the craziness, with the volatility, it is a great time to pass your evals. And I have some good news for you. Apex is running a 90% off deal. Shout out to Apex. They are the partner of today's stream. It is dirt cheap. If you want to get in the world of sim to fund and trading, this is the time to do it. 90%. You cannot beat that. If you do the intraday drawdown on the 50K accounts, I think the eval is $20. Let me get the specifics for you. But right now, if you were on the fence of like, oh, do I want the accounts? Do I not? I want to wait, maybe be a little bit patient for it to get going. Or maybe if you need new accounts or something like that, folks, this is the time. This is the time. Hang on. I want to get you the exact values so you know how cheap actually is. Well, hang on. While this is playing out, I'll put the market up for you. So for the end of day, there's two new accounts. Remember, Apex has all of these new accounts. For the 50K account, it's $35. And for the 150K account, it is $80. For the intraday drawdown, the 50K account is $25. And then intraday for the 150, it is $60. So $25. And then for the activation fees, the end of day is $109. Intraday is $89. So some pretty gnarly deals. I'm sure a lot of you are interested in the 50K accounts. So intraday drawdown, once again, is $25 to take the test, and then the end of day is $35. They still have the 1 day pass. You can no longer do the hedging thing. And then for the activation fees, once again, intraday is $89 and end of day is $109. So just wanted to share that with you right now. Like I said, they are running a gigantic deal, 90% off, and you could take advantage of that with the code Goonie, Goonie, pinned to the top of chat in the description of the video. And based already on today's movement, you could have, it's going to be a little bit of luck. Like, were you on the right side of the movement? But just commenting on the range of what we have going on right now, that is actually crazy. This is a lot of range. What in the world is going on? So we've already taken out this high. Golly, what are we doing today? All right, so we already took out this high, but let me go to the 1 minute just to kind of prove the point. We opened up at 382. We popped to 443. We came down to 390, back up to 460. These movements, like I said, yes, you have to be on the right side of 50-50 luck, but the fact that they still have the 1 day pass, it's a good opportunity. It's going to take a little bit of luck, and I wouldn't necessarily recommend being so degenerate with your funded accounts. But if you're like, yeah, I just want to kind of shove these past the finish line, that's the time to do it. That's the time to do it. I'm kind of watching, for me, if anyone's curious, I'm kind of watching just 400 right here, this $100 value, 23,400, and on SPX, that roughly lines with 6,400 on SPX. So out of the gate, I'm watching the two 400s, 400 flat on SPX and pretty much 400 flat on NQ. Above it, below it, I want to see how the larger players react to it. Obviously, I'm paying attention to momentum. Shorter term momentum is bullish. Did tap it early this morning, but bullish, bullish, bullish. That's how we started off yesterday, and then we quickly vomited bearish. So understand the market is doing a lot of switch ups these days. So I'm not necessarily committed to one side or the other. And I know that some people in chat are gonna be like, that means you're just guessing. Yeah. That's what everyone in the market is doing. Everyone is just making their best educated guess. And I'm going to be the first person to tell you, in case you've never done this research in the market, on an intraday basis, it doesn't matter if you're looking at the 1 minute, the 3 minute, the 5 minute, the 10 minute, the 15 minute, the 1 hour, the 2 hour, the 4 hour. On the past 5 to 10 to 15 to 20 years worth of data, it's all 50-50. Like, literally, the chance of the next bar being green or red, whether in your favor or against you, you have a 50-50 shot. There's not some sort of like amazing skew one way or the other. You do start to see an interesting, statistics from the world of statistics on the daily chart, where 54% of daily bars are green. So there is a 4% edge to be bullish on the daily chart. But when we're talking about the intraday time frame, as in sub the daily time frame, it's literally a game of 50-50. It is a game of 50-50, and the quicker you accept that and realize the game you're playing, the better odds you have at actually being successful at this game, as in realizing you have 50-50 shots, and it's all about keeping your risk in control. And obviously, when you're right, you want to ride it as far as you can. At least that's how I view the market. Maybe you agree with me, maybe you disagree with me, but that's where I really see when I have like clear long periods of success, that's pretty much what I'm fully dialed into. Just accepting I'm right half the time, wrong half the time. I need to optimize the times that I am right in the 50% correct bucket, and I need to minimize the times that I'm wrong, the half the time that I'm in the obviously, I guess, wrong bucket. It's all a game of risk management. I know I say this a lot, but I just want to stress it because it's that important. The best traders are just risk managers. They're not really traders. They're just risk managers. 50-50 isn't half bad, not half good either. I do want to remind you, Chicago PMI is at 9:45. JOLTS job openings and consumer confidence is at 10 a.m. At any point today, we could get another update from Trump. He's already been talking about the UK and Iran and what he's telling his advisors. So at any moment, news could come out from that. And then also at some point today, most likely sometime in the afternoon, we're going to be seeing the roll from the JP Morgan position. Thus far, we are not seeing it. It's evident here when you are. But anyway, I'm expecting a lot of craziness, a lot of volatility, a lot of big movement. So if you want to take advantage of that, Apex is running their 90% off deal. It's the best deal they run. Right now, you could take the test for the 50K count for as low as $25. Pretty solid deal. Code Goonie, Goonie, to take advantage of it. It is pinned to the top of chat. It is in the description of the video. 50K ADA was 187. Now it's 399. No, that's not right. That is not right at all. Hey, there's a cat. What are you doing? There's a cat. A little bit of a pump up, a little bit of a fall down, tying the lows, and then a pump up, and not really much of a trend. Piper, what are you thinking on the day? You thinking we should watch the JP Morgan roll? Is that going to be the craziness of the day? Come here. It's nap time. We all know it's your nap time. Everyone on the stream knows it's your nap time, so don't fight me on this one today. We all know it's your nap time. Her early morning, she's already watched too many birds this morning. That's what's really going on.
Order canceled.
What are you doing, Piper? Come on. We're trying to run a show. We're attempting to run a show, might I add. We're holding above the session VWAP. We're holding above the anchored VWAP. Short-term momentum is bullish, but I don't know. I don't know if I'm biased because I'm swinging puts right now to hedge my account, so maybe I am biased. But something about this with the roll and Trump popping off, and honestly, even Trump's commentary this morning didn't seem the most bullish to me. But like I said, maybe I'm just a biased player because I do know this in my own trading. What are we doing, dude? Come on, dude. I do know this in my own trading that when I'm swinging directional puts, I have a tough time trading against that in my options account. So there is a chance that I'm just a heavily biased player. Like that's completely possible. Gap fill is possible. There is a gap on SPX, which would actually involve the JP Morgan put position getting tested. There's potential of it today. I mean, SPX would have to pop 50 points, which is about $5 in SPY. So that would bring us from 640 to 645. Is it the most likely? No, because we're already up 1.3%. So it's not impossible, but just from odds, like just how often do we move that much? No, but possible. It's in the realm of possibility. Dude, you need to chill today. She's just being grumpy. She's a little overtired. She's like a toddler. She's a little overtired. Too many birds to fight this morning. Every morning, dude, those birds start popping off, and Piper, she goes crazy. I'm going to be completely honest. She gets this crazy look in her eyes. She starts like doing the chittering thing, and then she just nothing. She just sees blood, dude. Just pure anger. Pure Piper, just relax. I get it. You're overtired. The birds, they're always just talking crap on her. They're always just talking crap. We are coming up to the high from yesterday, so pay attention to that. Obviously, could just be a reaction level. On SPY, it is 640.37. On SPX, it is 6427. I wouldn't be surprised if there's a little bit of profit taking right there, but maybe not. Like I said, I'm a little bit more paying attention to this 400, the key technical psychological level there. And then obviously you have 450, 453. And then from there, you have the top of the transition zone, which is also that JP Morgan position right here, 6475, which is also roughly the upside gap fill. The top side gap fill, the low from Thursday, March the 26th is 6473. So pay attention to that as well. Like I said, pretty much perfectly aligned with the JP Morgan position. But I think right now, Spot Gamma had a really, really good point that there's actually a chance, as much as this market's been crazy, I get it. The VIX right here, we're trading at 28. That is an elevated VIX value for sure. In a weird way, you can argue that the JP Morgan position is actually suppressing volatility. So I'm really, really interested to see what happens today and the fallout of today, basically the trading session tomorrow to kick off the month of April. I'm really, really curious what's going to be happening. Very, very curious because if that realized vol is no longer being hampered, oil just caught a bid. We did just push the intraday high. SPY, we might have a little bit of profit taking at the high from yesterday. That's a reasonable technical level to be paying attention to. If you're not marking out the previous day's highs and lows, you're doing yourself a disservice because a lot of the times you see reactions like that. It's no surprise that we wicked above and sold because people are just targeting that level. They're like, cool, I'll take my profits there. I'll slap on a short there. Now, of course, you can keep going, but generally on the first attempt, you see a bit of reaction. But anyway, markets popping, options flow is going the opposite way, which that disconnection is incredibly important to me. And what's momentum still bullish? I guess if on ES, if we break below the intraday low, that's something. And then NQ, you have to go below 360, 340, below 300 is kind of a big deal. Okay, so momentum's bullish. It's giving a little bit of it up in the short term. Options flow, Mag 7 did pop, giving a little bit back right there. We just got Chicago PMI. It did pop a little bit. Must have been a good report. Chicago PMI just came out at 945. That was that pop right there. Yeah, right here. So we were dipping into the Chicago PMI, and like I said, wow, we're still going. So it must have been a pretty solid report. The market doesn't generally react that hard to Chicago. All right, let's see if they're bringing on Rick.
Correct.
They must have really liked that report.
Now, I can read about how TurboQuant works, but it's not going to help me understand how it actually works. But what
was that? The actual result for the Chicago PMI? It must have been like oddly good.
Memory. I mean,
but it's not
52.8. No, it's the contraction.
I know, because everyone decided that's a deep
And the market's popping on that one?
I think we're not even going to
Chicago PMI expectation 54.8 came in at 52.8.
City's view is
Maybe
that
we're in that
Turbo
upside
Quant
down
has
world of the bad news is the good news, because
They,
like
at
maybe
face
it's going to
value,
force
a new
the Fed to be
efficiency
supportive
technique
of the
reduces
market.
a compute memory cost, but it also further unlocks usage. So I guess they're talking about
But anyway, the important stuff today is at 10. Consumer confidence, JOLTS job openings, once again, 10 a.m. Eastern, so we have about 14 minutes for that.
This year, except for the oil parabolic movement. That continues.
Yeah, Micron's off the highs by a third.
Yeah.
The Kospi's in basically a bear market, which
getting
was
fucked up
for
today.
a while there, Jim, the best performing stock market
Not
in the world
good thus
this
far.
year.
Was, well, you know, you had
Not
Sam-
good
you had
thus far.
Well, you have
SK
Hynix, and you got
so great.
Samsung,
Samsung
and
was so
then
great.
South
All right,
Korea is
the
really
SPY
hit
is
by
back
the
at the high
threat
from
of
yesterday.
not
Bitcoin's
having
catching a
energy.
bid. Oil did pop,
They
gave it
took a lot
back
of our
very,
liquid
very
energy. I will
quickly,
tell you
and
that
we are
Micron,
getting
which
higher
is
highs,
last
higher
week, is
lows.
not that
How's the
close
SPX?
to the other two.
SPX is leaving a little bit to be desired here. Oh, there we go. 940. It had to wait for it, but then we finally got it. I am on the wrong side of this trend. What am I doing? I'm breaking all my own trading rules.
High bandwidth is, you know,
I'm breaking
Yes.
all my
And
own
we'll see if they
trading
do some
rules.
listing around the world as well. Try to
I have
broaden their
think
investor base.
They are
I need to
aggressive. They
cut
all came to
this.
see
I've
the
had this
show, which
short
was terrific,
since
but
like
it reminded me that SK
7:30
Hynix
this
is number
morning.
one, not Micron,
Basically,
and that was perhaps
I was breaking my trading rules and I was trying to fade Trump because I thought that was the new trend. So I wasn't really trading on anything that was like price development or options. I was literally trading off the pattern that we've seen over the past 3 weeks of Trump pumps it, we get faded. So I did that. I waited for the Trump pump, or I saw the Trump pump, like I said, around 7:30, slapped on a short, and it is not looking good.
As we're talking, guys, got some Chicago PMI. Let's get to Rick Santelli.
All right,
Hey,
here's
Rick.
our boy Rick.
Hi, Carl and Dee. This is our March read on Chicago PMI, coming in on the light side, 52.8.
How did
We're
that
expecting
pop
a number
it?
closer to 55. Sequentially, follows
Be careful. Yes, I fully
57,
agree.
So it's lower,
Today,
and it's the lowest of the year.
I mean,
It's
the
lowest
sessions
since
have been
East of
nuts, but I'm
last
expecting kind
year,
of
as a
more-
matter of fact.
more craziness
However,
than normal
it's the
today.
third month, January, February, March, over 50 in expansion mode. We haven't
Look
had
at that
the first
pop.
3 months in expansion mode since the
Puts.
beginning of 2022.
No one's buying calls.
Interest
Be
rates
careful.
are moving
The
down.
S&P 500's
430
popping.
and a 10,
No
that's down
one's
5.
buying
Haven't
calls.
closed below 430
They're selling
since Thursday,
puts.
the 19th of March. Maybe even more
Interesting.
important, a 2-year note right now hovering down.
Bulls
6
are not
basis
following
points at
suit on this one.
377, hasn't closed under 3 3/4.
They did on the Mag
in
7.
2 weeks. And why is that important? Because on Friday,
Nasdaq
it seems though
also
Treasuries
got a pop right
stopped
there at
playing tag
9:45.
with the oil market. That's something to pay attention to. Squawk on the Street will return after a short break.
Interesting. All right, so the PMI was not good. It popped the market. Like I said, it's not the craziest assumption that it's just like, okay, if things are bad enough, maybe the Fed will actually be supportive. But what's weird here is right at 9:46, a minute later, options went fucking nuts. Here, let's turn the volume off on that for a second. Right here, you can see we were down, even though price was up. Shit, dude. I'm just getting destroyed. And this is all 100% my fault. I was just trying to, I hate this. Like, it's just the political, not really a political bias, but trying to trade off of political headlines when it just, it doesn't work well. It does not work well. I was fighting momentum, and it's going to very, very greatly cost me unless there's a miracle fucking turnaround here soon, which I would say the bulls are in control. I'm on the wrong side of this one. Like I said, I took a short a long time ago, like at this point 2 hours ago, and I'm just getting my face destroyed. And it was just stupid. I saw momentum from the tweet went bullish, and I was just trying to pay the pattern of where 10 minutes later, 20 minutes later, someone comes out and says the opposite, and the market falls right back down. I feel like that's the pattern that I've been honing in on. And I guess that's not happening today. So this is what I get for deviating from my core trading system of, nope, what's the trend? What's the momentum? Don't give a shit about the news. Don't try to identify political headlines and what it means and what it doesn't mean. So, I mean, I guess I could theoretically still get lucky if we just like take a hard V-shaped pivot from here. But this is what I get for just being a fucking dumbass. This is what I get for being dumb, dude. For breaking the system, or maybe not breaking, but trying a new reasoning that's not really the most well-founded, of like trying to fade political headlines, whether good or bad. It seems like then the opposite happens. And this is 100% what I deserve for just not sticking to what I know best. You know, this is 100% what I deserve for not sticking to what I do best. It would have been sick if it worked, because I could have already been done on the day, but now I'm like babying a position that I don't like. Like if I had no position right now, here's what I would be telling you guys. 5-minute bullish, 10-minute bullish, 30-minute bullish. I look at NASDAQ, 5-minute bullish, 10-minute bullish, 30-minute bullish. 4-hour has some decent run all the way up to equilibrium. That wouldn't bother me too much. I'd look at flow. I'd say, okay, it was bad. This pop right here, great. It's in line. I'd be a little bit freaked out that they're not buying calls, but okay, they're starting to, but whatever. Movement's movement. Mag 7 is starting to improve, so that would make me feel a bit better. Like by most measurable things in the short term. Once again, we're talking about short term like trading. The bulls are in control. I don't know. That I wish I were on the opposite side of what I'm doing right now, and I just stupidly thought I anecdotally saw patterns recently where if Trump says something and it drops, well, right after that, then we pop. And then on the vice versa, if he says something, we pop, right after that, we drop. And kind of pointing out that we always return to the equilibrium. So like I said, I went short around 7:30, about 2.5 hours ago. And I was wrong on that one. And what's a bummer is I was almost able to get out for break even right at market open. I was like 10 points away, 5 points away. And now, obviously, the opening session is greatly going against me, which is literally just going the way of momentum. So I have no one to blame but myself. And the fact that I'm still in the trade right now is not good, because now I'm at the situation where my two I guess pieces of reasoning, my two strategies are now in conflict with each other, because my core Icarus system is actually looking for longs, and there's a good chance I would have caught some portion of this, but now that I'm babying the fade the news, like literally just playing the equilibrium of the news, it's getting brutal. And I hate being in this position where the two schools of thought are in opposition of each other. I fucking hate it. I hate it.
Order filled.
Well, some of those accounts just got knocked out. Which ones? Fuck. Oh, something just got busted out. I just hit some sort of draw. Oh, probably on the evals, the new legend evals, because there was not much room on those guys. Whatever that was. Oh, wow. The Mag 7 is just ripping. Yep. This is why I just need to stick to the core Icarus. I would have caught this whole fucking thing. It's one thing to be like, oh, I had to trade and it didn't work, but I tried something. But to know that I would have been in this the whole fucking time at this point, probably playing for the gap fill all the way up here, that's brutal. That's so stupid. This is everyone's
Order filled.
Oh, what the fuck? Every so often, I think I'm going to switch it up. I'm going to try something. And this is what I get. This is what I get. Okay. All right. So dumb. So fucking idiotic. How are those accounts looking? Just stupid. I should have just been sticking to what I know instead of trying to do something new and innovative. The real kickers, I would have been in this from like 440, 450, 460. I'm looking at where Icarus fired. Fuck me, dude. I'd be up so much right now. Oh, that's brutal. That's a tough fucking beat. It really, really is. Son of a gun. Well, that's a lesson. And now what do I want to do, though? Do I want to just pray for some, like, I have on these bigger accounts, I have quite a bit of buffer. So do I want to wait for like a 50% retracement? Or do I really think that this is just going to like keep ripping? I mean, we are at 450, which is why I have this up here, because there could be some reaction. But like I said, I'm literally like Icarus starting at actually 941. Icarus has only been firing bullish. I'm like actively going against my own system because I thought I could get in and out and fade the political updates. What a dumb fucking move, dude. Such a weak move. Weak shit. Weak. Well, let's see. Maybe I could still get lucky on this one. I lost my 2 Legends evals. They were the brand new evals that I started yesterday. And then I also, the brand new take profits, I lost those 2. So I lost my 2 Legends accounts and I lost my 2 take profit on this pump. Fortunately for me, the other accounts have enough of a buffer that like they can withstand this. But obviously at a certain point, everyone has to scream uncle. So I need to decide exactly how I want to handle this. Exactly how I want to handle this one. 10 a.m. Fuck the 10 a.m. I mean, at this point, the 50% retracement is like 470. It's not going to be as bad. I feel lucky that I was frozen out of Lucid. I feel lucky that I was frozen out of FFN because I'm not trading them. So it is helping keep all of the damage to a minimum, but it is still very much not good. Fuck. There's nothing more infuriating than putting in hours and hours, like hundreds of hours of effort to build out your own system and your own models just to be doing the opposite off a fucking whim because you think you are interpreting a pattern. Like, it's not even my interpretation of the headlines. It's literally just recently the patterns are if there's good political news and we pop, it gets faded. If there's bad political news and we drop, then we bounce right back. It just feels like there's almost like the rubber band effect back to equilibrium. And on this, the pop, I was like, okay, cool. I'll wait. Thought I saw some weakness, hopped on. And I guess to be like self-critical here, probably when it broke 400, I probably should have been like, fucking see ya. But then at every single point, there was like then a reason to hold on to it of like, okay, maybe it'll get rejected. And then here, the 9:45 announcement, seemingly not good. We popped anyway. At this point, now it's almost waiting for this 10 a.m. announcement, which can make the situation even worse, especially because, we still have legitimate distance to go for this upside gap fill. But it's just a kick in the nuts, honestly, because like I said, Icarus has not stopped firing bullish since 941. Embarrassment. Absolute fucking embarrassment. I'm going against my own shit. Fuck. Weak. Here's a look. And even this, it could go in my favor. Look at that. The options flow. There is weird mismatch. I mean, maybe we're going to get the 10 a.m. reversal. Maybe the news will break in my favor. We're about to find out. What time is it? Okay, we have 20 seconds. The Jolt job opening and consumer sentiment or confidence, one of those comes out at 10 a.m. So we're about to find out. Let's see if they're bringing our boy Rick back. All right. Maybe I could get on the right side of luck today, but generally I am not lucky when fighting Icarus. It is most of the time a pretty fucking stupid decision. And it looks like, again, it is a stupid decision. I need it like this to be miraculously bad. And it is not bad.
Good Tuesday morning. Welcome to Squawk on the Street. I'm Sarah Eisen with Carl Quintanilla and David Faber. We are live as always from Post 9 of the New York Stock Exchange. It is the last day of the first quarter and stocks are higher today, but pacing for their worst quarter in years. We'll talk to market experts Ed Yardeni and Adam Parker about how they're positioned for Q2.
Yeah.
Plus, the CEO of Hershey is with us.
Consumer confidence higher than expected. Job openings slightly less than expected.
And it's another Supreme Court opinion day, so that means we're waiting.
And the Supreme Court might be talking today.
Authority to fire Fed Governor
Bitcoin's
Lisa
popping.
Cook. We'll bring you any headlines on
This
that case
is just
utter
fucking embarrassment.
First up, though, conference board and jolts on deck. Let's get back to Rick Santelli. Hey,
Utter embarrassment.
Indeed, these are consumer confidence numbers from the conference board for the month of March. 91.8 is the headline, much stronger than the 87.9 that we were looking for. Sequentially, higher than the 91.0, which is a subtle revision from 91.2. That would be the best since the end of last year when we were 94.2.
SPX
so it is a
not
good
following
number,
suit
if we look at
on the
present
intraday high. That's a little
situation,
interesting.
Same thing. A solid number, better
A little bit of put
expectations.
buying, and they stopped buying calls.
123.3, that would
Maybe
be the best
I could get lucky
since
here,
the
but
end of last year as well.
odds are no.
Finally,
I need a clear rejection at 50,
70.9,
and he needs to take
better
out
than the
37.
68 and change we're looking for.
And
It
I
is
am not on the
only
right
numbers
side of
thus far
odds.
That's not sequentially higher. Our last look
We're going
was
in on a
72,
2-7 offsuit.
70.9
I'm
would be
praying for the
lightest
best.
since 67 and change in January, but all in all, pretty good numbers. Job opening and labor turnover, always 2 months in arrears. This is a February number, expected a number close to 6.9 million, comes in at 6,882,000 with a fairly large revision to the upside in the rearview mirror from 6,946,000 all the way up to 7,240,000. So obviously this read is a bit lower, but that 7,240,000, that would have been the highest read going back to May of last year. So the revision really is a pretty big deal, and it softens the blow a bit to the lighter number under 6.9 million for February. We see interest rates are to the downside.
2-7 offsuit,
of course,
folks.
Oil's over $100 and Brent's even higher. We see that the Treasury market seems to have disengaged a bit from oil prices. Sarah, back to you.
Okay, thank you, Rick. And I'll just add another headline here. It does not appear that we will get the Lisa Cook Supreme Court case today.
Not coming
so
out.
We'll continue to be on watch for that next time we get a decision out of the Supreme Court, but no decision on Fed Governor Lisa Cook. I'll pick up where Rick left off on the consumer, better consumer confidence.
I can't get over how
prices,
fucking dumb I am.
Headline, they did surpass
I would have been up
$4
140
a gallon
points
national,
if I took
across
pretty
the
much any
national
of the main
average. And
Icarus
that,
signals
is a
today.
milestone. It's about
Like,
$1 more than we were last month. You feel this
What
when
a
you're
fucking
at the pumps,
embarrassment.
higher prices,
What
of
a
course,
fucking
in
embarrassment.
California. Now, a few silver linings. Number one, we've been here before.
How can we
very
make it
recently.
back?
3 years ago, we were above $4 a gallon. Now, it didn't happen this quickly that time, so this can probably lead to some sticker shock, and Americans are feeling it intensely and acutely. But during that inflation spike in 22 and 23, we were looking at these levels. And then the other chart,
I might get lucky here.
Before,
SPX is taking a hit.
Comes from Bank of America, which
SPX
shows the
is taking a
percentage
hit.
share of energy spending, basically, of consumers, and how that has just come down to below.
Are we going to do the old 10 a.m. reversal?
You know, it used to just make up a lot more. Energy was more expensive. It's better.
Maybe
you know,
right here at
spend
50.
On groceries, there are all sorts
I'm not
of
seeing
consumer
follow
discretionary
through in
spending. It doesn't mean it's not
SPX.
gonna hurt, but and not
Price is
psychological,
holding, but
because,
options
we
are
watch it and
telling
we
a
watch the
slightly
tick
different
higher,
story.
So people are
But
acutely
also, we've
aware
seen
of what
craziness
the
in that
price of
today.
gas is and when they're filling up their tanks, but lower share of wallet. And I'll just end with, David, you know, this good consumer sentiment read from Morgan Stanley about the top concerns for consumers. No surprise, it's inflation. That's the top concern. There's the inflation
Still
rate.
diving.
But
How is
if you
price
look,
holding right now?
It was actually at higher levels about a year ago when we were
Just
going
right
through
at
Liberation
50.
Day. And
I guess
tariffs,
this
and there
is
was a
going
lot
to
of
be
hand-wringing
telling us
about
the real
inflation then,
story.
too. So
Either we crack through
the worries about
54
inflation
and rip
had
it up to
ticked
75,
We're higher
or
than we were last
we
month and the
crack
month
through
before, but we're not as
38
high as we were a year
and come
ago,
back to like
when
25-ish,
about
maybe
60%
27.
of the consumers were worried about inflation, but no question
Mag
that's the top
7 is
concern.
holding
It's not
well.
surprising because
S&P
we've had this
500 is
cumulative impact of
diving.
inflation
Two
over the last
completely
few
different
years, and
stories being told in
people feel that.
options flow. completely different stories.
And as you said, an important point, as a percentage of the overall budget for the consumer, it's less than it was certainly 20 or 30 years ago. That said, $4 a gallon at the pump still has an impact.
Oh, for sure. It matters. And by the way, it's not just oil. I think we should also mention aluminum prices, because they had their best month here in years, spike up. Alcoa's up again. You know, I got this chart from Kohrs, the beer maker, because this is going to impact their earnings. It's what they pay
Look
for
at that.
cans.
It's still going, but price is being, it's sticky.
And that's essentially a gauge for, you know, what we pay, what they pay in this country. And you can see just how much it's outperformed and how much the price has risen compared to some of the other metals like copper and gold. And that's why it's going to be painful.
Maybe
that's one of your
it
main
could
input
just find a
costs, like
base here, though.
beer
Like
maker.
I said, it needs to kind of snap 37.50. But once again, watching this options flow, Mag 7's holding.
The first major airline
Nasdaq, that actually is more bullish. Big mismatch today, folks. Big mismatch. But momentum favors the bulls. 5 minute, 10 minute, 30 minute. 5 minute, 10 minute, 30 minute.
Becky Quick on Squawk this morning gave his take on some of the recent.
All right, we don't really need that. So options is questionable because SPY is diving. And remember, we're dealing with the JP Morgan position in the 10 a.m. reversal, but NASDAQ is up, S&P 500 is down. But from a pure momentum, 5 minute, 10 minute, 30 minute, it's all bullish. 5 minute, 10 minute, 30 minute. So I'm still objectively on the wrong side here. And like I said, it was stupid of me. Like, it was 100% stupid. I just thought I was being big brain and noticing a pattern that obviously, even if it did exist, I did not play it well today. And it just seems like, whether good or bad, when we have a political headline, to me, which 100% I agree, I got this wrong. It seemed as if we were getting faded, and like, if we popped, then we quickly dropped. If we dropped, we quickly popped. This morning we popped. I was like, cool, I'm going to fade it for 20, 30, 40 points. Like, why not? And I was wrong. And instead of getting out where I reasonably could have, I'm now holding the fucking bag. And what's worse than that is I'm fighting my own system. Icarus has been firing long all morning, and I'm just a fucking dipshit holding the bag. So like, it's frustrating. Absolutely frustrating. Let's see. But 'tis trading. Sometimes maybe I could get lucky anyway. I did lose my 2 Legends evals. I had 5 Legends, 3 were funded, 2 were evals. I lost those. And then I had 5 TPTs, same thing. 3 were funded, 2 were evals, and I lost those, the 2 evals. So fortunately, like I'm more frustrated. Like, the damage really isn't that bad yet. Of course, we still have a lot of time left today, and maybe things are going to get dramatically worse for me. Thus far, I've been able to contain, if you will, my stupidity. Like I said, day's not over. It's just more frustrating. Like, I feel like I should be doing better stuff, not be so fucking stupid. But we'll see. I'm basically waiting to see. Well, I already kind of laid out the levels for you right here. We're snapping that 37.5. The next point to look at is the high from yesterday. But we already broke the high. That's a pretty strong sign. What's going in my favor is the SPX Delta is dropping like a rock. So that's like the one thing that's kind of currently going in my favor. Other than that, I'm being fucking dumb, to be completely honest with all of you. I'm being completely fucking stupid. Oh, and that's the frustrating thing when you know you should be doing better. I mean, I would have already been done on the day. I would have gotten in at 440. I would have locked in either at 500, or I could have written it for 100. I would, dude. But I guess that's trading for you. That's trading. You can't fucking cry over spilled milk. You just need to focus on being less of a fucking dipshit day in and day out. Why would I ever try to trade a random new system? And even if I did it, why would I try to do it with like not good risk control? Absolutely idiotic. Absolutely idiotic. Maybe it gets lucky. Maybe I get lucky and this completely vomits, but I need to be better. Need to be better. Better. Ah, fuck. Momentum check. Yeah, bullish. bullish, bullish, bullish. That's all bullish. Fuck. I'm fighting it. I'm fighting the trend today. And whenever you fight the trend is normally the one that wins. Very, very rare can you fight the trend and end up being victorious. The one thing that's like giving me, there's a little bit of light at the end of this tunnel is how much the S&P 500 delta is getting rocked, but even that stopped. But it dropped pretty hard from 955 to 1008. So that trend was beneficial to me, but I hate being the person betting on a trend reversal because statistically, the overall market is more of a trend following, has more trend following qualities than not. So betting on being like, say, hey, like if we could all sit here and identify, oh, that's bullish, that's bullish, that's bullish, 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 to be the person saying, no, that's actually the extent of it. And we're going to like completely switch trend right now. It's just more often than not, you are trend continuing rather than trend reversing. So getting into the position where you're like, oh, like, is it going to reverse? Is it going to reverse? Is it going to reverse? Like it obviously at some random points, the market does reverse trend. But I have found that when I count on my luck of like, oh, okay, no, I'm in the position and trend magically reverses right there. It just doesn't go well. It does not go well. So even this, we came down right to that fucking level, dude, and it's not going. Look at that. This level I called out, the 37.5, exactly where we bounced. And even this is starting to reverse on me. Fuck. Do I just want to bail now? I'm going to give it a second just to see if this 10 a.m. reversal is actually playing out, but to clarify, I'm literally going against my own system at this point. Like I'm going against Icarus, and my track record for trading against Icarus is not good. Not good, not good, not good whatsoever. Not good, not good, not good. But hey, maybe there's an aspect of luck. Maybe I have enough karma to get lucky today. VWAP is 343. Interesting. The 50% retracement is 480. So IB though is 380. So the intraday low is actually above VWAP right now. The session VWAP. That's a little interesting. The flow is coming back a little bit. The Mag 7 is still long and strong. The NASDAQ is pretty decently strong too. We popped and went flat. Today, more so than normal, I keep coming back to this because of the JP Morgan position. Obviously, we're already kind of seeing some craziness. We sold, we popped, we sold. Now we're flat at the low, while the NASDAQ is pretty much at the high, while the Mag 7 is literally at the high. So big mismatches in options. Momentum is clearly bullish, 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 which is kind of why I absolutely hate my own trade. Absolutely hate it. But let's see. We did get rejected at 50. We did come through 37.5, but we didn't really sell off. If we do, I'd be looking at 27, just the high from yesterday, but that would involve the crack below 35. So kind of watching that. Not really a shoulder, head, shoulder. Not really. What are we doing over here? Oil is not really, oil's coming down a little bit while Bitcoin is going pretty much directly up. Pretty much directly up. Why is that not working? Why is this not working? Hang on. Once again, Apex. Why can I not get in? What are we doing? We're chilling. We have to wait. SPY overshot the high from yesterday. So did the Qs. The Qs are getting pinned to it. The SPY is slightly above it. Obviously, if we fall a little bit more, that's the key level. The interesting thing of the day is what's happening with the overall flow. That is, without a doubt, going to be the interesting development. Oil's still going down. Oil's actually taking some pretty noteworthy hits. We went from 103. We're down $1.40, $1.50. Interesting. Where's flow? Mag 7 still popping. Wow, look at that. It is up and away. Ah, there's so many good reasons to be bullish right now. What the fuck am I doing with my life? What am I doing that I'm trading like this? SPY is even starting to recover a little bit there. All my own fault. Being a dum-dum. Let my dumbassery be a lesson to everyone that betting on a trend flip is generally not a quality trade. If you are saying, hey, I can identify the trend, but I, for some reason, think it's going to be switching right now, unless you're just like the luckiest fucking person out there, it's generally not the quality trade you actually should be making. It's just not the high odds, repeatable. I like this market. The bears need to put in a lot of work for me to be able to get myself out of this stupid fucking hole. Golly gee willikers. Oh, what was this? 1, 2, 3, 4, 5. That's quite the pop. 27 is kind of interesting. We're giving a little bit back, but it's too strong. Look at this Mag 7 still holding. We're just seeing too much mismatch. There's too much mismatch. So, but look at that. The SPY just took another considerable hit. This is, like when I told you that today was going to be probably a little bit crazy. I mean, look at it. Price is flat, doesn't know what to do. The S&P 500 delta flow is getting destroyed, while the Mag 7 is actually having one of the best runs we've seen in a while. Like, that's just probably the best option, as in like what to be trading right now, is actually to be doing nothing until there is agreement in the options flow. That's probably the most like reasonable way to be playing this right now. And then the next reasonable way to be playing it is bullish, because there's more bullish things than bearish things. And I'm the dumb fuck who is somehow making the worst option of being bearish. Look at that. It's just ripping. What am I doing? I like just can't bring myself to do what I need to do. And what I need to do is literally just cut this. And if I do cut it, an even better option is to literally just go long. Like, what the fuck am I doing right now? This is crazy. I'm like, it's like a fucking out of body experience. I know exactly what I should be doing. And I just keep watching every fucking little tick, hoping that I somehow get lucky. And if you're just praying on getting lucky, it's the dumbest fucking thing. I hate when I get into fucking modes like this. It's so, I gotta cut. All right, let's close.
Order filled.
All right. I did the first step one. I close. It's kind of like when you're at the meeting and you're like, all right, hang on, here's what I did wrong. Here's what I did wrong. All right, so we at least got out. So now I can actually get onto the right side of Icarus rather than just trying to fade stupid fucking political headlines. Yeah, no, we're at the stage of acceptance. The stage of acceptance, and this is, now it's the game of, can I fucking possibly recover? Oh, brother, oh, brother, oh, brother, oh, brother, oh, brother. 37115. So I guess to be very, very clear, right now I have no position on. Wow. Did I like just have acceptance at the worst point in the fucking day? That would be uniquely funny. Uniquely funny, if I might add. Hang on. Let me get through this. What's the flow looking like? SPY's still going wild. Mag 7 is still showing strength. Bullish. Yeah, all that momentum still bullish. We took out that high from Jesus. What a easy trade it was to the upside. I hope you guys caught it to the upside. It was a pretty evident one from just hey, this is the clear trend, and it had enough size that you probably made a good amount of money. I hope you guys caught it. I feel like most of the time I would. I was just being too stupid, too fucking dumb, and it cost me. Too fucking dumb, and in all reality, I deserve it. I deserve it. Wow, and now it's coming. You have to be fucking kidding me. It's going to be one of those days, team. It's going to be one of those days. Oh, all right. JP Morgan's still in play. They're going to roll at some point. Who knows the craziness that's going to cause. Icarus was firing bullish this whole morning. SPX is a little questionable. Mag 7's incredibly strong. Nasdaq's pretty freaking strong. That was a little bit of a VWAP bounce. Huh. Okay. I need to disconnect and reconnect. Losing data, which that's fine. I probably shouldn't be trading at the moment anyway. That's not right. My data is not reconnecting now. Oh, brother. Oh, brother. Oh, brother. Oh, brother. Oh, brother. Oh, brother. Oh, it's because... There we go. I think that's right. Maybe. I don't even know what I'm doing at this point. And am I missing it? Yeah, I am kind of missing this. Icarus has been long this entire time. That's just so... Oh, that's so fucking infuriating. Okay, but at least we could get our head straight. Like I said, as we always say, no crying in the casino. No crying in the casino. 673 and 278. 673 and 278. All right, just getting the copier and everything set up the way that it should be, and managing basically all this bullshit. Oh, I do like what's happening here, though. Kind of. Hang on, let's do a sanity check. Yeah, that's starting to pick up. All right.
Order filled.
All right. Now we're in alignment. Now I'm doing what I should actually be doing. Actually getting on the right side of it. Momentum is picking up on SPX. It's been strong on NDX. Mag 7 has been strong. Momentum 5 minute, 10 minute, 30 minutes bullish, 5 minute, 10 minute, 30 minute. I'm now in alignment perfectly with Icarus. This is what I should have been doing pretty much the entire fucking day. And I didn't out of pure stupidity. But anyway, wow, the second I do it, it's like, actually, this is where we're going to switch trend. Any meat left on the move? That was a big move. I don't think that's like necessarily the best reasoning because you never know. Like, yeah, I mean, the question is there meat on? Dude, we still have the upside gap fill. Like, we still have the JP Morgan position all the way up here. So, I mean, of course, I'm not clairvoyant. I don't know, but like, there are many, many traders who are specifically looking, specifically looking for this pop up to 75. So, yeah, actually, I mean, that's another 25 points in SPX, like without a doubt. Like, yeah, on the flip side, we could literally just get pinned here and nothing might happen. That's the whole point of it. That's why you're saying, okay, just get in alignment with your system and stick to your system. That's it. You don't know the next bar. So this idea of that's in the realm of you're trying to predict. Don't try to predict. Just literally find your system, stick to your system. Don't do what I did and try to come up with a random new system on the fly. That is a very silly thing to do. No, stick to your system and play it out exactly how it should be played out. Boom. Done. Easy peasies. Easy peasies. Easy peasies. I can't believe that. Man, I would have already been up so much. That's the real kicker. Is not only did I lose 2 funded TPTs and then my evals on 2 legends evals, I still have all the other funded ones. Like, it's just the frustration when you know better and then you're just not doing exactly what you know you should be doing. That's where it gets like, dude, what the fuck? Like, I deserve it. I deserve it. I deserve it. I was dumb, and being dumb generally costs you money. Being dumb generally can cost you a lot of money. All right, the high from Friday of last week is 610, so that's another 50 points. And then, or a spike midday, and then another point to watch is 664. Obviously, that's for NQ. If you're paying attention to SPX, obviously you want the breakout and the continuation above 50/54, and then that would set us up for the upside gap fill at 6475. More specifically, it is 6473.79. You might want to set an alert. That is the low from Thursday of last week. So once again, 6473.79, and it just so happens that that's roughly 75, and that's exactly where the JP Morgan put side of their collar position is. So there's various things at that level. I don't know if we're going to get there. It's an interesting level to watch, and if we do get there, I'd be expecting some sort of craziness and reaction. Spot Gamma has the implied one-day move high at 6460. That's something to consider. A little bit of a trend line breakout there on the SPY, and we are knocking on the door of an intraday trend line breakout on the Qs. And for me, I finally, I was so dumb. Like, that was so fucking dumb of me to just not be doing what I knew I should be doing this entire time. I know I've said this a million times, but I cannot, there are not words. It cannot be properly articulated to be putting hundreds, if not thousands of hours of work into a particular system than just to be such a fucking degenerate and do not follow it. That's one thing, but to do the opposite, like, how fucking dumb can a person be? Like, how fucking dumb? It's... I'm sure you guys have been there. I'm sure many of you guys have been like, yeah, I trade this, and most of the time you're good, but then every so often something happens, and you're like, you know what? I might just randomly try something else that isn't back tested and whatever. And that's dumb in a certain sense, but then to be like literally going against the thing you know, like statistically works, it's mental purgatory, dude. It's so fucking brutal. It's so brutal. And now I'm going to have to spend all day fucking grinding it out. Grinding it out. Grinding it out to get this fucking back. I guess that's trading. I was there this morning. Hey, I'm there with you, but like I said, the first thing you have to do is just get the fuck out. So I'm happy I cut it. And then like right away, you could kind of see everything a little bit more clearly and ask yourself, okay, like what should I actually be doing? And once again, Icarus just kept firing bullish. So I said, okay, cool. I'm just going to ride with Icarus and just do what I should actually be doing. Of course, especially on a day like today with Trump talk and this, that, the other thing with the JP Morgan position, craziness can happen, but I'm very much watching 6475. I was waiting a little bit for the SPY to start to improve, so I'm seeing a slight improvement there. I like that. Mag 7's been strong all day. Nasdaq has been decently strong all day, really started to get going at 944. So, I mean, I'm comfortable. Like, I'm angry that I did the dumb shit, but now I'm comfortable that I got onto the right side of doing what I should be doing. And I hope that the market gods now reward me for following my system that I should be following. Wow, dude. I would have been in back here. That's brutal. I could have rode it all the way up. Maybe I would have gotten knocked out there at 10:08. Doesn't matter. I would have made enough money on that pump. Rule of thumb, don't doubt Icarus. Well, statistically, that's the crazy thing where I feel nuts is like I've proven to myself time and time again. And then every so often I'm like, but this time might be different. And then it costs me a shitload of money. And I don't know how many times I have to learn that same lesson. Like it feels fucking nuts. Like, what isn't that Einstein's thing of like the definition of insanity is doing the same thing and expecting a different result? Is I follow Icarus and it grows my account, and then every so often I get into this mood of like, nope, I'm gonna do something different, and then it costs me money. And you'd think, hey man, learn the fucking basic pattern. Learn the basic pattern. But we'll see. If we get another leg to the upside, I should be all hunky dory. I should be good to go, but we'll see. We'll see. To clarify, I am on the right side of Icarus, which is currently long, just to, I guess, try to be transparent. I was being stupid fighting Icarus and holding a short position for, an extra 150 points than I fucking should have, which was, by all definitions, stupid. But I guess the first thing you can do to fix stupid is admit you're being it and then try to get on the right side of being smart. I just hate myself when I fight trend for literally no fucking reason. But what is this? Okay, SPX actually just took another hit. Interesting. So still a lot of weird movement in the S&P 500, but the Nasdaq is still climbing, and the Mag 7 is still climbing. 5-minute, 10-minute, 30-minute momentum is bullish. 5-minute, 10-minute, 30-minute momentum is all bullish. So momentum is bullish from 5 to 30 on ES and NQ. Let's set this up, I guess. I don't know, 7. And we'll set another one, whatever that one is. Just set up some alerts for like maybe key level breakouts or breakdowns. Well, I very much hope you guys read it early when you could tell. I was like, yeah, no, you should be bullish. I hope you guys crushed it. Like I said, my head was just so far up my ass. Like a professional excavation team was required to remove it. And I'm hoping that it wasn't a little bit too late. That was a nice pop there that really got faded. Holy shit. That's a bummer. Really got faded. I am legitimately nervous about this midday bullshit because you never know the implications of this roll, especially if JP Morgan starts slinging $5,000 or $10,000 contract like trades all at once. Like, look at this mess that we're getting. A lot of puts being sold, calls are being bought. We're seeing some end of month rolls. Mag 7 showing strength, Nasdaq showing strength, S&P 500 looks actually drunk. Momentum. Oh, okay, we're struggling at 50, so I'm hoping that SPX can get right now it's really knocking on the door, but it's having an issue. I'm hoping we get the breakout of 54 and that push up to 75. That's what I'm looking for. And with that move, I don't know if I'll be able to get myself out of the hole today, but I'll be able to really, really cut down on my stupidity, which, like, whatever, you live to fight another day. Sometimes when you're stupid, you just need to survive the gauntlet. And that's my mode right now. Of course, your goal is always to get green, and your goal once you're green is to always get more green. But right now, it's just frustrating when you know you could do better. Are you watching Bookmap? Yeah, I always do. But that just tells you where shit is in that real time. So I care more about Bookmap when we get to those key levels, because I want to see how the big players are structuring themselves at those levels. So that's where I care a lot more about it. But okay, we're getting an interesting double rejection right there. Really, the market's having a tough time at 50. We're having a tough time at 50. We got rejected, pulled back, higher low, broke above it, no follow through, got smacked, bottom, climb back up, double top again. And I guess we're going to have to wait and see. So kind of watching this downsloping trend line, but really it's just the game of watch 6450 at SPX while simultaneously trying to figure out how drunk the S&P 500 delta flow is. To be fair for the bulls, as much as I might say this looks drunk, and that could freak you out, which, hey, it's something to pay attention to. The NASDAQ is clearly strong, and the Mag 7 thus far is clearly strong. And we're going the opposite fucking way. Perfect. That's exactly what I want to hear. All right, there are buyers at 520. There's more buyers at 520 than there is at 500 flat, which I find very interesting. If only I took more trend line classes, this would have never happened to me. Oil's popping, which makes me wonder, is this not an options thing? Did something just get announced related to Iran for some reason? But right here, you could see past 4 to 5 minutes, oil clearly moving. Did something happen that I missed? Where's the news? News feed. IRGC, we will target U.S. companies in the region as of April 1st in retaliation for attacks on Iran, according to the state media. Shit, dude. So not only am I now stuck in the stupid position of trying to worry about what's happening with JP Morgan, we have Iran popping off in retaliation to what Trump is doing. Fuck. I'm just digging myself into a hole. Okay, like, what can I do to be smart? What the fuck could I possibly do to be smart here? Yeah, that's not. We will target U.S. companies in the region as of tomorrow. Iran's IRGC issued a warning against 18 American technology companies: Microsoft, Apple, Google, Intel, Boeing. So, like, Iran's popping off. Dude, not my fucking day, team. Not my day. All right, let's get some tunes pumping. I need to think straight. We need to think straight. We need to think straight. All right. Oil's popping on that. Is it gonna get... Are people buying it right here at the double bottom? Are people saying, yes, I need to buy? Or is this like, are we actually going to fucking snap? What are you guys doing? Are you buying this or are you going short? Are you buying? Yes, no, maybe so. Stop at break even. I'm jealous. If you guys, you should just be fading everything I do today. I am not where I need to be. I'm a million miles away from where I need to be. A fucking million miles away from what I need to be doing. Oh, let's look at the flow. It's crazy shit happening. Yes, this SPX is still getting hit. Shit. Are there buyers at 500? There's an R-right chunk of buyers at 500 if you're watching NQ. It's an R-right chunk. Wow. These are the days that I wish I just fully automated Icarus. Sometimes I don't because I like want to avoid certain trades, but then that opens up the door for doing trades that have nothing to do with Icarus, and they just piss me off. I just get like so irrationally angry at myself. And then granted, the days that you're tilted in revenge trading, you can almost guarantee are going to be the days that crazy shit happens, like IRGC saying, hey, actually we're gonna fucking do this and that, and JP Morgan's gonna roll. Like, it's when it rains, it pours. Like, the days you're having a bad day, tilted, revenge trading, it's guaranteed that it's going to be bad. We're right at 500. Is it going to hold this? The 50% IB is down at 480. So we're at the key level of 500. SPX is still diving like no other. Oil still popping on this. Jesus. Seemingly an important inflection point. Oddly enough, Mag 7 is holding with no issue. NASDAQ only gave back a little bit. SPX is getting fucked.
Woke up to the bell. I don't need no 9 to 5. Got charts on my mind. I just hold and ride.
Wow. 5-minute momentum still bullish. Yeah, it would have to get pretty hit for it to actually switch. We're just below 500 now. Once again, 480 is the 50% retracement on IB. We just tagged it. Oh, what the fuck am I doing today? How am I being this stupid? NASDAQ, it is now kind of speeding up a little bit, but the Mag 7 is holding there. SPX did hit a delta low there. It is call selling and put buying. Oh, thoughts. I'm like really doing my best to try to give this a second here to like see if we can like have a real trend or a continuation or reversal. And right now there's like some conflicting things. So like I'm really doing my best to just be like as calm about it as I can, but it is by no means easy. By no means easy. Wow. Wow. We're right at that 50% VWAP. Or the 50% IB. I don't know why, but I'm tempted to slap on a long here. But maybe that's stupid. I'm tempted. Is that dumb? Well, it's dumb if it doesn't work, and you look like a genius if it does work.
Order filled.
Well, we're gonna find out if I'm gonna look like a genius or look like a fucking dumbass. Alright, I'm basically saying I want it back above 500. I'm looking at NQ over here, and I'm noticing we got knocked below 500, so I took that long, and I'm hoping that it can actually recover. So I'm hoping that my minimal risk, high reward trade, obviously minimal risk, high reward, so like, it's just, is this the actual bottom? I'm trying to catch it with overall momentum. 5 minutes still bullish, 10 minutes bullish, 30 minutes bullish, 5 minute, 10 minute, 30 minute. Like, that's where the bias is coming from. I do admit that the S&P 500 flow is looking crazy. So I'm hoping that just doesn't completely bone me. Oops. Hang on, I wanted to go this way, and then I wanted to go this way.
Order filled.
Nope, it is fucking boning me. Shit, dude. Fuck. I hate when bad decisions cascade so fucking horribly. And that's all I'm making today is like I'm trying to fucking patch a hemorrhage, and it's just like it causes you to do dumb shit you wouldn't normally do just to like try to quote unquote get lucky and get out of the fucking hole. Wow. What to do? Now it's a game of like how much buffer do I have and how much like pain can I fucking withstand here. This is breaking. Dude, if the initial play would have worked, I'm gonna lose my mind today. If that initial one, like, I'm gonna
Order
lose
filled.
my fucking mind. Yeah, this is, I'm tilted. I know it in myself. Oh, the optimal move is what?
Order filled.
Yeah, there goes the other legends. I'm just like watching this. Wow. So the name of the game is actually like try to keep the TPTs alive. Hey Piper, how are you? How was your day? I hope your day is better than mine. I'm being dumb as fuck. Oh, I'm just fighting everything. I'm fucking.
Tried to pivot, lost the bet, took a swing, caught a knife, now I'm drowning in regret. Told myself I'll play it smart, just one more and then I'm through. Now I'm outside in the rain, screaming, please just break even, dude. I was chasing tickers like they owe me rent. Now the broker's knocking saying,
Hey.
pay your debt. I was dominating, but my hands got red. And my P&L looks like a fucking mess.
How lucky am I that I was frozen out of the FFN and the loses today? Like, that would have just been so much more dog shit. It's the size that fucking kills. It's the size that fucking kills. Okay. What are we looking at? 80. Dude, I swear, this is going to end up going all the way fucking down to that original goddamn trade. Would have been fine. Like, this is some cosmic fucking irony involved in this. Got out at the worst point to quote unquote get right. I'm dumbfounded by this right now, and I just need to stop the hemorrhaging. I wonder the best way to do this. I mean, it feels like we're making a fucking beeline for the IB low now. Like, this is just getting this fucking, look at that. God damn it, dude. I'm losing my mind today. Just all stupidity. Like, how fucking dumb can I be? What do I want to do? Dude, I mean, if this just goes, it could really fucking go. I need to get out to save any buffer so I don't lose all of these accounts. Yeah. Can I bring myself to do it? 1 minute went bearish. 5 minute is going to go bearish in 2 minutes. 10 minutes testing right now, so that one hasn't technically broken. We didn't get the upside gap fill. Fuck me. Whipsaw action, yeah, and I just am on the wrong side of it. All right, I need to close it to like settle and to like potentially get on the right side of shit. Okay, so let's be actually fucking smart. So I'm flat now. I got out. Gonna give myself a second to reset and be like reasonable. I did lose my Legends accounts, obviously. I still have my main take profits, but I gave back most of that buffer, which was dude, I worked so hard to get that buffer, and just like one day of being a fucking dipshit did this. So dumb. Like, and it's all my fault. I can't be like, oh, but like the news or this or that. No, it's all obviously 100% my fucking fault. It just sucks. It just sucks. All right. So anyway, I am flat. I stopped the stupid fucking hemorrhaging from being a dumbass. Look at that. I could have. That's gonna drive me up a wall. That like I could have held that initial one and I would have been fine. Which obviously would have been a stupid thing to do, to bet on it. But the trend. Okay, before when I said don't bet on the reverse, well, started to legitimately actually reverse. Oh, it's gonna be a day. It's gonna be a day. But anyway, I did at least stop digging the hole by cutting the position, because I mean, at that point I think it would have blown everything out, and then I would have been a very unhappy camper. I would have been a very, very unhappy camper. Not that I'm necessarily a happy camper right now, but like, just we were getting so close to VWAP, it just like was reasonable that we're going to test it. And then like this fucking weird look at that. This is the JP Morgan roll. You're watching the roll in real time. And I just like, my timing was off. Like if I waited a little bit more, if I was a little bit early, like I just like, my timing was like perfectly fucking wrong. And literally I'm almost back at break even. If I held that initial play that started this whole thing, which like, isn't that some like market karma? Market karma. Wow. Yep. Well, once again, the market teaching some brutal fucking lessons. Sometimes it pays to be stupid. Yeah, had I been a little bit earlier or a little bit later, I was just like perfectly fucking wrong. Perfectly wrong. It sucks being the liquidity. That's not a thing in SIMDA funded. People try to blame it on that. I'm like, oh, they're hunting it. Dude, on SIMDA funding, come on, grow up. That like, I don't like that. Like, you have to own it. If like, as much as I'm not stoked today because I did dumb shit. Like, once again, I did dumb shit. This idea of you're the liquidity, this or that. No, fucking own it. If you did something dumb, you did something dumb. Like this idea of trying to blame some outward external force. No, you're in control of your trades. Like, you are. Like, I hate when people do that. It drives me up a wall because it just means you're a giant fucking pussy and you're not accepting blame for your decisions. Well, I didn't say it was your decisions that led to it, but you said it sucks to be the... What are you talking about? Liquidity. That's the dumb... Your actual statement is more dumb than that. It sucks being the liquidity. You think, even if you were actually trading like not SIMDA funded, you think your one contract in futures is the liquidity? You think that they're hunting your one contract? Come on, grow up. They don't give a fuck about yours. We targeted the industries belonging to telecom. Okay, so the Iranian army is reporting more bombing shit right now. But no, like, folks, when it comes to the world of trading, it is you're in control of the trades. You have to take the ownership of it. You have to take the ownership of it. Perhaps I misunderstood. I mean, not hunting. Does that not make us part of it? What? I don't think people understand what liquidity is. Like, the term itself has an actual definition, and it's been hijacked by these dumb fucks on Twitter. Liquidity is just like, how deep is a product? Like, how much can it trade? An illiquid product means you can't really trade that much size without vastly moving the market. And a very liquid product means like there's a very deep bid-ask spread. For whatever reason, the Twitter sphere has like come up with a new definition of like liquidity that doesn't make sense. The definition of liquidity is, how deep is it? How deep is the bid-ask spread? How much could you trade without really moving the market? Something illiquid, there's not many willing buyers or sellers, so when you do your trade, it really moves it. And then on the other side, if it's super liquid, like, you could market buy or sell and you wouldn't be moving it at all. Obviously in Sim you aren't liquidity, but they are doing liquidity sweeps before reversing. No, that means they're just going above previous highs and below previous lows, but that's not a liquidity sweep. It's just because a lot of people are targeting those levels because we could see them as higher lows. People like pitch it as this like giant nefarious thing. It's no, we can see the low, so people put their orders right below it. You can see the highs, so people put their, like, people love to target the previous highs and lows, so it becomes a self-fulfilling prophecy because so many people are looking at it, putting their orders there. That's why you get the reactions there. It's a self-fulfilling prophecy. It's not like the market makers are like, we're going to target it and like knock everyone out and then do this and then do that. That's not how it works. Market literally bounce off of IB for the same reason. So right there, that it becomes a self-fulfilling prophecy. Enough people looking and paying attention to the same thing inherently causes the reaction at that level, because enough people are looking at it and placing their orders there that you either get those continuations or the reversals depending on the situation. But that's like what a lot of these things are, whether you're looking at VWAP or IB or 50% retracement or highs and lows in these liquidity sweeps. It's all a self-fulfilling prophecy. Enough people, if they're paying attention to it, inherently then causes a reaction, and the more often that it happens, it causes more people to do it, and then it like reinforces it. Like that's what you're looking at. If you are in a simulated account, your orders are not actually real in the market. It's all simulated. Moose, you're saying something that everyone already knows. Everyone is well aware that if you're trading on a sim account, you're trading on a sim account. Like, that is not, you're not informing anyone of anything on that one. Not informing anyone of anything, brother. What accounts do I have? So, like I said, I lost the Legends. I lost 2 of my 5 take profits. The other 3, I stopped the hemorrhaging right before losing them. But I don't have much buffer left, dude. Like, such stupidity. Such stupidity. If you hit your daily loss limit on ABEX eval, is it done, or does that, it's done for the day? No. That's a soft breach. The daily loss limit is a soft breach. Wow, look at this. IB is once again 480, and the anchored VWAP is 490. So 480, 490, and then obviously 500. That's kind of an interesting level. Our options flowing. So we hit an extreme low at 1057. We're seeing a bit of a pop now. Mag 7 is still decently strong. NASDAQ did vomit, and also at 1056 getting a pop. Momentum, 5-minute went bearish. We're now testing. 10-minute saved itself. 30-minute is still bullish. Oh, what is the quote-unquote smart bet here? All right, I have to short this. Do I have to? No, I'm still feeling iffy about it just because of how wild this flow's been with the JP Morgan roll that we've been seeing playing out. Like, this is, and this can still continue. There's no, like, it's not like it has to be done right now at this moment. Would you consider yourself a discretionary trader? No, the opposite. I have a specific system that if I follow, I seemingly do well. And then the days that I veer into the realm of discretion, kind of like I did today, are generally the days that I take serious hits to my account. What are all the edgeful stats for both sides of being touched? I think 10%, I want to say. 10% chance of hitting both sides of IB. It's something low for sure, which we've already done it today. It's not even, we actually hit both sides of IB before 11 a.m. How crazy is that? So hitting both sides of the initial bounce in any general day is like a pretty rare development. And we did that today before 11 a.m. How fucking nuts is that? Like, absolutely no. Like, today, good opportunity. I'm just angry that I didn't make money when, like, there was definitely opportunity. Definitely a good amount of opportunity. All right, well, we are getting into the midday session, which today is probably going to be even crazier because of the JP Morgan stuff that is actively playing out right now. So I guess my biggest advice is, like, just be careful, size down, and, like, use my missteps as a good example today. Stick to your system. I beg of you. Don't just do random discretionary trades. Stick to your system. Respect your risk, not only when to get out, but also your sizing. Because, like, clearly one little misstep and I can't say it's game over. I lost the evals. I don't care too much about them. Of course, it cost me money, so that's frustrating. But I really hurt my TPTs, my actual funded TPTs, which is not good. It is not. Now we're back above 500. But anyway, the one good thing about today is it's incredibly easy to pass these tests because we're moving so much so quickly. So Apex is running a pretty insane 90% off deal. Pinned to the top of chat in the description of the video. 90% off, 50K account on the intraday, I think is like $25. So really, really good deal. Code Goonie will get it for you. Pinned to the top of chat in the description of the video. I have on no position right now. I'm just going to wait to see what the hell is either happening or not happening. But I've just been way too stupid, way too stupid. So I think I just need to step away for a little bit, take a breather, and then come back and hope that we had some movement this afternoon. But I just need to do the same thing that I'm pitching to you. Pay attention to whatever you identify as the trend, pay attention to proper sizing, pay attention to proper risk. And basically, if you're wrong, just admit you're wrong. And also don't just do random fire from the hip trades, because that is 100% what led to me blowing some of those accounts. And now the more frustrating thing is how much damage I did to my TPTs, where I still have buffer, but I did serious damage. So I'm going to spend the rest of the day seeing if I could dig myself out of that fucking hole, but time will tell. That's what I have for you folks right now. I beg of you, respect your risk. Shout out to Apex, code Goonie, 90% off. Other than that, let my dumbassery be a good lesson for you. Hopefully my missteps can prompt you from missing your missteps, avoiding it, those pitfalls, and you could still learn from it regardless. But I'm going to see if I could grind it out today and make the bad less bad, but we'll see how it goes. Anyway, that's what I have for you. Best of luck today. I hope you do far better than I did. We'll post some content later on today, and then I'll catch you guys on the flippity flip tomorrow. Have a good one. Good luck. Respect your risk. Peace.